The market wobbles, and so when the market wobbles, people, two things, one is they start to take shots at the leaders, right? Because they try to take down the leaders, thinking that's what leads us down. But the second, it really highlights the grim reality that we're about to have a third year of double-digit gains. The S&P's up 80% over the past 3 years, and funds are measured on 3-year performance. Only 21% of fund managers are beating 80% over that 3-year period. It is one of the worst ever periods for fund managers, and so they'd rather see the market fall so that it falls to their performance level. I think what's more likely, of course, is the market follows a seasonal pattern, which means there's going to be a lot of chasing into year end.
Let's start with the current tone of the market. According to Tom Lee, investors are breathing a sigh of relief as the government moves to reopen. The shutdown had created a fog over economic data. Air traffic slowed, businesses paused hiring decisions, and visibility on key indicators was lost. Now that the uncertainty is lifting, traders are rotating back into risk assets. The message from the market is clear: we're back to business. However, Lee cautions that this relief shouldn't be confused with complacency.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
So the market obviously assumes that this is all going to happen, the government's going to reopen, and we're just going to get back on our merry way in the stock market. That's certainly what the trade says today. Am I right?
Yeah, I think there's a certain measure of relief because the shutdown robbed us of visibility on the macro data, and of course there's economic hit and they're suffering because air traffic is slowing. So I think for many reasons I think this shutdown was a problem for investors.
So what about now between now and the end of the year? It's the AI trade that really seems to be debated. How do you feel about it heading into this final stretch?
I think it's still in really good shape fundamentally. We know there's a lot of visibility for AI spending, and we know there's still innovation and gain of function taking place with the models. So to me, it makes sense that there's still a payoff coming. I think one of the issues that investors are going to grapple with is, even though they may say AI stocks are expensive, Nvidia still only trades at 29 times forward earnings. I mean, it's still cheaper than Costco, so it's hardly a bubble valuation.
No, but I don't think when they talk about the valuation of AI stocks, they're necessarily talking about Nvidia. I think you would agree with me on that. They're more so talking about names like Palantir and some others where you could easily say, yes, their earnings have been great and the story's incredible, but at some point you're only willing to pay X for a stock, and maybe that one's gotten a little bit too rich, using that as an example of the kind of names they're talking about.
Yeah, I mean, I think Palantir is an example of what they call like an N=1 company. You've got a founder-led business developing products that really seem like magic for the companies that adopt it. So, should this just be getting a softer multiple? I don't think so. And Palantir's opening up so many markets, and if it was a venture capital firm, they'd be getting, potential carry for how they transform businesses. So to me, I think that this is still a market discovering how to define the valuation model for Palantir. But to me, that doesn't mean it's a bubble. People would have said that about Tesla in 2018 because it looked incredibly expensive, and the stock in Tesla has been a huge performer since then.
But what was last week about then, do you think, at its heart?
Well, I think at the heart is the market wobbles, and so when the market wobbles, people, two things. One is they start to take shots at the leaders, right? Because they try to take down the leaders, thinking that's what leads us down. But the second, it really highlights the grim reality that we're about to have a third year of double-digit gains. The S&P's up 80% over the past 3 years, and funds are measured on 3-year performance. Only 21% of fund managers are beating 80% over that 3-year period. It is one of the worst ever periods for fund managers, and so they'd rather see the market fall so that it falls to their performance level. I think what's more likely, of course, is the market follows a seasonal pattern, which means there's going to be a lot of chasing into year end.
Don't you have any concern at all about the level of money that these companies are spending on their build out, and now the new wrinkle of tapping the debt market rather substantially to help do it?
I mean, Scott, yes and no. I mean, AI is proving to be a scale game. It's not like you and I could start a garage and make a model competitive with OpenAI. We need to have scale and a lot of chips. That's really the model that was required for telecom infrastructure and for energy infrastructure, and of course for internet infrastructure and even fiber. So it makes sense that a handful of players are really playing a big role. And just like in the energy system, there's 8 majors. Everybody spends money on the 8 majors, and the 8 majors pay a smaller ecosystem. So I think it makes sense that that's what's developing in the U.S., and of course it's leaving other countries in the dust.
Bitcoin is back at 106, so it has had a little bit of a bounce from the low we had back in early November, where we went all the way down to 98K. So it's good to see Bitcoin with a little bit of life back in it, back above 106 or so. One of the things to consider here is, and again, I've said this before, I mean, is not about having a crystal ball, especially at this point. There's all sorts of indicators that you could look at. Time-based indicators make you think that's it. Euphoric-based indicators make you think we've barely gotten started. So it depends on what you put a lot of faith into. I wanna like talk about one potential view that could play out, right? And I'm not saying it has to, but I could see a scenario where it plays out like this. Because a lot of people have kind of pushed back on the idea of like, well, if this is 2019, why does the cycle have to be over at the end of this year? Well, I want you guys to consider that what if, and this sounds absurd, but what if the downturn that we got in 2019 when QE started, right? So the downturn started before QE arrived, but that downturn back then lasted, I don't know, 6 months? What if the same thing happens, right? Where like QT ends and then we get a downturn in 2026. And you could argue that like the 2019 downturn that happened after QE started, what if that's just the 2026 downturn? But maybe the 2026 downturn is not an 80% drop. What if it's just like a 50% drop? And by the way, that doesn't even mean the high can't. I mean, the high could still be ahead of us for all we know, right? I mean, like, yes, obviously there's a chance that October was the top. I mean, at this point, guys, it's just something we accept as an outcome, right? I mean, no one really knows. But let's be optimistic, and let's say Bitcoin goes to new all-time high. I still think you're going to have that slight downturn in 2026, where you're not necessarily looking at like an 80% drop, but maybe just like a 50% drop from whatever the high ends up being, right? So if it's a 126, maybe we drop to 60K. If it's 140, maybe we drop to 70K. I think what you could see happen, and this is more of a macro view, right? More of a macro view. So what if this is the way it plays out, where you have a top either in October or in sort of a best case scenario, maybe we rally back up to this trend line again, go above it, and then drop. And then we find support down here by the end of 2026. And then we get a bounce off of that. So what I'm trying to say is, there is a chance here that the 4-year cycle is perfectly intact, and it manifests itself in a different way each cycle that makes people think it's not going to happen.
Now let's shift gears to Bitcoin, which recently bounced back above the $106,000 level after dipping below 100Ks earlier this month. Lee and analysts in his circle suggest that trying to predict Bitcoin's exact moves isn't about having a crystal ball. Instead, it's about understanding cycles and macro patterns. One interesting scenario he explores: what if the next major downturn doesn't arrive until 2026, and even then, it's not catastrophic, just a 50% correction rather than the classic 80% crash we've seen in prior cycles. He draws a parallel to 2019, when the market briefly corrected as quantitative easing began. What if 2026 mirrors that? A mid-cycle pullback before the next leg higher?
What if a lot of people end up being right. They're just, you sort of stretch the truth, right? You move the goalposts slightly so that, you know, you have your 2019 bull market where Bitcoin leads. You then have sort of this like intermediate bear market, and then you get sort of lower interest rates, the return of money printing and stimulus checks and all that jazz. And that's sort of the next phase. But you could still have a brief downturn in 2026 in the midst of both of those moves, right? So you have your first move up there, sort of your consolidation, and then your next move up. Maybe this time will play out in the same way. You just have your first move up here, then you get your 2026 consolidation, and then you get another move up, right? Like, what if it just simply plays out like that? It wouldn't be completely unheard of for it to play out like that. I could see it doing something like that. I also want to talk about, you know, other ways that you could view this market, and that is through a lens that might be kind of a weird one to think about. It might be kind of weird, but just to put it out there. You could argue that, you know, sort of the looser monetary policy stuff that happened in, like, you know, 2016, 2017 and whatnot, and low rates and everything way back then, we had this massive bull market. And then 2019 was just sort of a continuation of it, where, you know, a lot of it was sort of like an echo move, where a lot of the stuff just went into Bitcoin, and Bitcoin rallied on up. And then the consolidation period began until rates went a lot lower and money printing began. So you have the same thing again, right? Where you have this massive move up, and then this is kind of like an echo move where a lot of the liquidity just flows into Bitcoin. But it was bigger this time than back in 2019 because QT lasted a lot longer and rates were a lot higher, right? So what I'm saying is brief downturn in 2026, and then we hopefully pick back up, you know? Now, in the short term, with Bitcoin closing above the 50-week moving average, we have to be open-minded to, you know, could there be something left, right? I mean, hopefully there is. Time-based indicators don't really suggest it unless you look at the ROI after the peak, but it's at least something, you know? And I know I'm a broken record at this point, but here's the thing. In 2019, when we went through this process, you know, Bitcoin continues to stay above 10K for a long time. Altcoins were not really able to perform that well during that process. So Bitcoin continued to hold. So I know this idea might sound crazy and absolutely absurd. But what if we focus on what matters? And that's Bitcoin. And we stop putting so much attention into all these like meme coin garbage crap, and Bitcoin dominance goes higher. Now, in this case, you don't have to really worry so much about what Bitcoin does, in my opinion. I mean, obviously, if Bitcoin were to dump back to 100K, like, yeah, it's going to suck. But if Bitcoin were to do that, I mean, alts would probably get annihilated, right? I mean, they probably would. Whereas if you do hold Bitcoin and the market does go back up, there's a really high chance dominance is going to go with it. Now, could we be in sort of a 2-week period where altcoins are getting a little bit of relief? Yeah, it's possible. We even said many times that about early to mid-November, a lot of times you get sort of this relief in alt Bitcoin pairs. You got it in 2020 and you got it in 2017, right? Like, it's not unheard of to get this relief by alt Bitcoin pairs in early to mid-November. The point is mid-November to early December, they're likely going to sell right back off to Bitcoin. So just keep that in mind, right? Keep that in mind that, like, this time probably isn't different. And I've had so many people ask me, like, why Bitcoin dominance is crashing. Guys, it's up 8 weeks in a row, you know? It's up 8 weeks in a row. Yeah, it's just people keep drawing conclusions based on sort of drops after these wicks to the upside, but dominance remains resolute in the direction it is headed. And it just keeps on marching higher.
Another key takeaway from Lee's analysis is focus and not getting distracted by short-term noise. He argues that Bitcoin continues to dominate because it represents the core value proposition of crypto: security, scarcity, and scale. Altcoins, on the other hand, may get temporary relief rallies, especially in early to mid-November, but historically they tend to sell back off as Bitcoin strengthens. The data supports it. Bitcoin dominance has risen for 8 consecutive weeks, despite minor pullbacks. The broader message? Investors should focus less on speculative meme coins and more on the structural trends driving value and adoption.